So yesterday we saw that Elon Musk ran a poll over the weekend saying that if more people voted for him to sell shares in Tesla for, not evading taxes, basically he was saying that he's tired of all of this hate that basically people are evading taxes through unrealized gains, that he would sell 10% of his Tesla holdings, which would be around $18 billion. And we saw that 57% of people said that they wanted him to sell, and he said, I will stand by this. So we haven't heard anything since then that he actually is going to be selling. But what I wanted to do is talk about in this video, unrealized gains versus realized gains, and what the difference is and how to pay taxes on your investments. Now, I'm not a CPA. I'm not telling you how to, do anything as far as that. I'm just telling you how I have done it, and I'm explaining to you the difference. So please, if you're going to do anything with your taxes, always consult a professional. I am not a tax professional. So let's talk about Elon. Let's talk about why he would do something like this. A couple of, different, articles have come out today saying that he has a $15 billion tax bill, and so therefore he's going to try to liquidate $18 billion in stock, pay that tax bill, and then he's going to end up owing money on that later. But basically what ends up happening is when you hold a stock, you have what's called unrealized gains. So you can just see here in this example, I bought Facebook about a week and a half ago, and right now I'm up about 6.83%. I'm up $458. Now, I don't owe any taxes on this money as of right now. As long as I hold this stock, I don't pay any taxes on the amount that this goes up. If, in theory, this ripped for the next 5 months and I somehow made $1 million, obviously I'm not going to make $1 million, but if I had $1 million and therefore my position in Facebook was worth $1.7 million, I would not pay any taxes until I sell. So when you have a position, whether it's up or it's down, that is called an unrealized profit or loss. So as of right now, I have an unrealized profit of $457 on Facebook. Elon Musk, who does not take any payments at all, he doesn't get any salary from Tesla, only his net worth really is based around his stock in Tesla. That's why we've seen his net worth in the past 2 years go from like 50 billion to 320 billion because of how well Tesla stock has performed. So good for him. But the poor thing about this is obviously I cannot spend this money, my unrealized gains, unless I sell it. And when I sell it, that's when the government takes their cut. So a lot of people are saying that, Elon Musk is just selling so that he can have some liquidity, or selling so he can pay a tax bill for $15 billion. I'm not too worried about reading this thing with you guys. The main point is talking about what it would do to Tesla and what, unrealized profit and loss is. So that's an unrealized profit or loss. A realized profit and loss is when I sell the stock. So let's say right now I were to just hit the sell button and I were to close my position on Facebook. I would have a realized profit and loss of $462. At that point, that would get added to my 1099-R or a K1, depending upon how you own the stock. At the end of the year, this gets reported to my tax documents. I bring my tax documents to a professional. Please remember, I'm not a professional. And then they would say, okay, you made $461 on Facebook on, whatever today's date is, the 8th of November. This is going to be short-term capital gains. Short-term capital gains happens when you hold a stock for less than 1 year, and you're going to owe about 40% of this money that you've made. 40% of your profits is going to go to the government. Now, if you held it for more than a year, then you're going to get taxed at about a 15% bracket, and that is called long-term capital gains. We'll talk about that in another video. So right now, I would probably owe about $300. I'm not $300. Jeez, that'd be terrible. I'd probably owe about $200 on this trade, maybe like 170. Now, that is a realized gain and a realized loss. What a lot of people don't understand is that when you close a position, you are required to pay taxes on that at the end of the year. Some people believe that you don't pay taxes unless you pull it out of your broker. And that's not true. So if you're somebody who turned 3 grand into 30 grand this year, but you haven't taken it out of your broker, the government's going to hit you for like a $10,000 to $15,000 bill at the end of the year. So please be ready for it. Some people believe that they don't pay the tax unless they pull it from the broker account, and that's not true. You pay the tax. You are obligated to pay the tax once you sell it for a profit, or you get to, defer money, or end up taking a loss on your taxes if you lost money. So that's unrealized and realized profit and loss. And the only thing that matters in this world, boys, girls, gentlemen of all ages, is realized profit. Unrealized profit, I don't give a shit about it. I can't tell you how many people as a trader or as an investor show me how much money they're up. Hey, I'm up. Look, they say I made 5 grand on Dogecoin. You didn't make 5 grand on Dogecoin until you hit the sell button. Oh, I made 20 grand on Tesla. It's not yours until you hit the sell button. And I'm not telling you guys to go and sell your stocks, right? I'm not saying that. Don't do that, especially if it's a long-term investment that you believe in. But I'm saying that you cannot say you have made anything until you hit the sell button, because you didn't. At any time, the market can take it away from you. So please realize that. Now, as far as Tesla and Elon Musk selling, 10% of his Tesla stock, that is about $18 billion, which is a lot of money. And you can see that the stock did sell off pretty aggressively, about 5% today. And I don't want to make this a technical video, because I am going to do a technical analysis video later on our other channel, Traders Helping Traders. But it would push the stock down. Now, one thing you have to understand is it's not like a public offering. People are not necessarily being diluted here, because it's not like they're just offering private shares to the public market. Elon's shares, most of them are public, or they're on the public market. Most of them are private too. So it's like half, but really they're not just generating or creating shares or doing splits to offer more shares out into the public market. It's not like that. So it's not like it's going to dilute shareholders by any stance or anything. So overall, I don't know why he wants to sell, to be quite honest. It could be because of a $15 billion tax bill. It can be because he's mad at rich people for, a quote of, deferring their taxes. But overall, I understand, it's his money to do whatever the hell he wants. But the main goal was to show you guys the difference between realized and unrealized gains. So, guys, thanks for all the support. I'll see you next time. Peace.